Talk to me about how significant that eBay business is to PayPal. Is there any way you can do the math on that?
Well, we can. To give some background, PayPal has been the primary payment provider for eBay for 15 years since the company was acquired by eBay. They had a 5-year agreement put in place that they would continue to play that role after PayPal spun off from eBay in 2015. So that agreement was set to expire in 2020. What many had been looking for was an extension of that agreement to remove what had been an overhang on the stock. The company actually announced that it was extending its agreement where it would be part of the eBay marketplace through 2023, which looked like really good news until about 6:15 last night, less than 2 hours after PayPal made their announcement. eBay came out and said that they were shifting to Adyen as their primary payment processor over time. Now, what does eBay mean to PayPal? It represents about 13% of its total payment volume, but it actually represents significantly more in terms of revenue because there were favorable terms associated with that agreement. So now the question is, over time, is PayPal going to be able to make up the TPV that it will not have as a consequence of this shift?
Well, Mark, even if you sit there and try and work out that question and can't, if you stripped out yesterday's story and just looked at the year that has been for some of these payment processing companies and tried to come up with the risk-reward proposition for a company like PayPal, would you have said already that it was less attractive?
Yes. Again, we believe that the company was already bumping up against its expectations bar. There is still significant execution risk around the PayPal story, particularly with regard to issues such as the monetization of its social peer-to-peer app, Venmo, in the face of competition from others like Zelle and Apple Pay Cash. From a valuation standpoint, if you go back to January of last year, PayPal was trading at a slight discount to the payment networks Visa and MasterCard. And there were questions about where PayPal sat within the payments food chain. You flash forward to yesterday, PayPal was trading at 20.2 times consensus fiscal 19 adjusted EBITDA, in contrast to MasterCard at 18.9 times, Visa at 16.5 times. Now, even if some sort of premium is merited in the case of PayPal, which again is questionable or at least debatable, that appears to be too wide of a gap for us, and that's why we moved to the sidelines.